We're coming to you from KwaZulu-Natal, where the G20 Finance meeting has been going on from Monday, where central bank governors and finance ministers from G20 countries are meeting. Well, they are meeting under an environment where there is high uncertainty in the global economy. We have seen at the beginning of the year when the National Treasury expected our local economy to grow at about 2%, but this has been revised downwards. This is on the back of the global tensions in terms of geopolitical tensions and trade wars. Well, these leaders are here meeting to find solutions to these challenges, to try and grow the economies despite the challenges that the global economy is facing. Some of the issues that are under discussion is the debt sustainability, especially in emerging markets, and also issues of climate change, the effects of that on the economy. But for more on this, we are joined now by the Central Bank Governor, Lesitja Kganyago, to talk to us more about the issues under discussion. Thank you so much, sir, for joining us. What would you say are the issues that the Reserve Bank would be advocating for at this meeting?
I think that it would be important to understand the conjuncture, and you sort of like was capturing it, and the conjuncture has to do with a lot of uncertainty. You have got uncertainty with respect to trade policy, you have got uncertainty with respect to economic policy, there's uncertainty with respect to financial markets, and there's uncertainty in the geopolitical space. That in itself makes it a complex task in framing up the policy responses that you actually would have to take. And what we have seen had been that in the period after COVID, after the great lockdown, what we had was that we saw inflation starting to surge, and it really took off in 2022. Central banks were slow to respond, at least from the advanced economies, but the central banks in the emerging economies started to respond in 2021. You could say that central banks have succeeded in bringing down inflation, but still there are a number of central banks that are not at target, including the United States, which is not yet at their inflation target. And I'm bringing that to you because the US is home to the world's largest capital markets. And to the extent that their inflation is not coming down fast enough, what you would then face is that the central bank there might slow down the pace of relaxing monetary policy. And actually, they had kept monetary policy unchanged for a number of meetings to date. And what that means is that global financial conditions could remain tight for long. And with that, it means that the cost of borrowing could remain elevated for all of us around the globe. And so that is the posture that we actually find in terms of the conjuncture.
And with that said, the US tariffs, how is the Reserve Bank assessing the impact that this will have on different sectors of the economy, and what role can the Reserve Bank play in terms of boosting local economy?
There are a number of difficulties in assessing the impact, and we are not the only one. Even the US Fed, they found that they struggle to assess the impact of the tariffs on the US economy. So, in our analysis, we first have to understand the impact of the tariffs on the US economy, what it would mean for output growth, and what it would mean for inflation, because then it determines what the monetary policy stance in the US would be, and then what the global financial conditions would look like. As I had said, it affects the cost of capital across. And the second aspect of the analysis would entail how that spills over into South Africa, and it gets complex for the following reasons. You must know that there are sectoral tariffs that will be targeting particular industries, and there is the overall tariff. At the moment, South Africa has a tariff of 30%. What we did in our analysis at the beginning of the year was to present a scenario, because we couldn't assess exactly how much the tariffs will be, how long they will be in place, and we have seen the uncertainty that the tariffs are on, the tariffs are off, you must make an offer, here is the new tariff, you are welcome to come and negotiate, bring on a new offer, and so it becomes difficult to analyze. So how has central banks responded? What central banks then did was to present a normal forecast and what we would call a scenario. What if this happens to the tariff? What if this or that happen? And then say to us, if that happens, how would the economy evolve? The initial assessment was that there would be an impact of about 0.3% on our growth. Interestingly, it is not that much on inflation. We expected that the imposition of tariffs by the US would lead to the dollar appreciate, in which case other currencies depreciate and it would lead to a higher inflation. But the dollar actually depreciated against the major currencies, and so even against the rand. But if you looked carefully at the rand, what you would say is that it is really a question of dollar weakness rather than because the rand has strengthened. Two industries that had a direct impact from the US. The first had been the automotive industry, and even in the automotive industry, it is for those producers, vehicle makers who are exporting to the US. Said there was a newspaper report this week that said that our exports of automotive to the US is close to 82% lower compared to in the first 6 months compared to the period last year. And that is significant because the motor vehicle industry, automotive industry employs a lot of people. And the second had to do with the impact on the agricultural sector. But even within the agricultural sector, it's the subsectors in agriculture like citrus, table grapes and wines that are mostly impacted by the imposition of the tariffs by the US. When you look at the big numbers, it might not look as significant because you just look at, say, 0.3. Yeah. But if you are growing at the rates that we are growing, that 0.3 is not an insignificant number. But if you drill deeper and you look at the areas where farming actually takes place, you will know that in farming we employ a lot of low-skilled workers. The social consequences of that and the impact on the unemployment in those areas is significant.
So, Governor, coming back to this issue of inflation targeting, there is an ongoing review of inflation targeting. So, how is the discussions, the broader discussions here, how are they influencing your discussions? I understand there's a move towards a lower target of about 2 to 3%. How is this influencing your discussions and the benefits of that to South Africans?
We're not discussing South Africa specific issues per se here. Suffice to say that here in the G20 we have got both developing and developed countries. As we had repeatedly said, our inflation target is higher than that of our peers. It's always a useful discussion to hear all the others. How did they move to the inflation target? What problems they encountered and so forth. But that is where we are. We have had these discussions between the Treasury and the bank, and I think that we are better informed now.
Well, thank you so much, Governor, for giving us your time. That is the Reserve Bank Governor, Lesitja Kganyago, talking to us there from the G20 Finance Track meeting.